Let me get your take generally on what we're looking at in this equity market opening up. We had some real strength in the U.S. coming through Asia yesterday. Why do you think investors like this market?
Yeah, look, a lot of action from China overnight, and I think this is going to be driving us for the rest of the day. This feel-good start to the day is all about the stimulus that we've seen coming out of China, the weakness of the yuan. This is, a lot of it, a reaction to the trade war that Trump's been trying to engineer. China's response to this and trying to stimulate their own economy. We could be at the start of a new risk-on phase for markets, I think, for at least the next few weeks.
All right, and we see especially financials doing well in Asia. Yeah. That has, I think, to do with rising rates in Japan. We see financials doing well here. Of course, some of them are coming out with earnings that are rather positive. Could this be a start of financials leading the way, and is that a good sign for markets?
Yeah, I think it could well be. We've had some really positive quarterly earnings out of the US. I mean, we're running at, 23% for EPS growth in the US, and it's been led by financials, which is so early in that reporting season anyway. They've had a great result, and UBS this morning were pretty decent as well. So, yeah, we could see that financials benefit. And as you say, I mean, JGB's popping up to 7, nearly 8 basis points. It's very exciting stuff.
And good for the bank's bottom line, right?
You know, bit of steepening, and that helps a lot. So it feels maybe not as strong as we had in late 2015 when China really stimulated hard. But this is a really good sign, I think, for risk markets for the next few weeks.
What would you watch out for? What are the things that would concern you right now? I mean, is Trump's trade war a big one? Is the Mueller investigation a problem? Is there anything in Europe that concerns you?
Yeah, well, we're going to see what the ECB says this week. I don't think they're going to say too much that's going to be exciting. Probably nothing to concern us particularly. Trade wars are there. And
Do we bother going to the ECB meeting this week?
It's fine. You know, we'll have a listen to what Mario says, of course. But it doesn't feel that we're going to get anything out of the, pre-planned path that the ECB seem to be following anyway. For me, the Trump trade stuff is becoming background noise. He's had to up the rhetoric and get up to like 500 billion with China to try and get people's attention to cause the uncertainty that we've seen. But right now, this could be fading into the background a little bit. We could be focusing on getting into corporate earnings, which I think are also going to be very good in the US, by the way, pretty good in Europe. That could well drive markets for the next few weeks in what is traditionally a pretty quiet period.
Right. Well, earnings are pretty exciting this quarter, I have to say, and it does seem to even be overshadowing Donald Trump's Twitter war with Iranian leaders. That doesn't even move the oil price. When there's talk of the mother of all wars coming out of Iran, typically, especially ahead of sanctions that are going to go into place on November 4th, it would move oil, but it's not.
No, and I wonder whether it's more about Trump's relationship with Saudi Arabia on oil, saying to the OPEC they want $1 million extra a day, and OPEC have responded to that and upped output, and the oil price has been very, very steady. This is a reflection of global growth as well, and EM growth is more oil intensive. We look at India and China, and you look at a lot of the frontier markets around the world, they're very oil intensive economies, and they're growing. We are not at equilibrium in oil yet. I think actually there's a little bit further to go in oil, and it's been a great trade for us, and even in the bond markets where you can play oil as well. It's been a great trade for us. It's one of our biggest themes for the next year.